G'day. How you going? Phil Tarrant, Property Buzz Friday morning, recording here in a bit of wet New South Wales, Sydney, the capital, running off the backs. And I don't want this to turn into a bit of a theme, but off the back of another event last night, the Real Estate Innovation Awards, which were on in town, looking at the best innovators in and around the real estate ecosystem, buyers agents, real estate agents, property managers, all in between. Good evening. I was there for a little while with my colleague Liam Garman, joining me again in the studio, who is our managing editor of all things real estate here at Momentum. Good night, mate.
Yeah, long night.
Long night. How are you feeling?
It's we're on to coffee number 2.
Yes, and I do know we are both drinking a Boss coffee, and to our friends over at the
good people of Suntory.
Suntory, we're still waiting for that shipment to come through. We're happy. No, we're not allowed to be commercial on this podcast. This is Property Buzz, but Liam was kind enough to have bought me a Boss coffee this morning. And there is a question, if anyone can help us out with this, and please leave it in the comments because we're not too sure. We can't work out whether or not there's actually caffeine inside of a Boss coffee. We don't know.
It's not on there. It doesn't say it's got caffeine.
It doesn't say it has caffeine. You assume because it says it has coffee in it that it has caffeine, but maybe that's like the metaphor of today's government. Yeah. Yes, so they are in government, but do they have any pluck? Do they have any spice? So,
well, they've got something. I don't know if it's good though.
I don't know. I don't know. But people were happy yesterday. I know the real estate industry is going through the ringer at the moment. I penned an op-ed.
You did.
Around it yesterday. If you haven't yet looked at it, you can see it on SPI and REB and all over the place. And it was really me just thinking and musing in the background. We saw the Senate pass through the bills, gone back to the House, and that'll get voted in. Did it happen last night?
Presumably, yeah. Well, I think they took
I was too busy drinking champagne.
Yeah, they took the widow tax out.
That's right.
They got rid of that after.
They took the widow tax out.
Yeah.
Okay. All right, we'll talk about that. But a bit of an op-ed from me, and what I really wanted to do. There's a lot of noise out there at the moment. There's a lot of people. There's a lot of distress, and I'd say a lot of stress out there. It certainly is a disrupted property environment for not only investors but also those professionals that operate in and around property. And we can go into some of that today. So it was really just my views and opinions on how we should be shaping the pathway into the future. And it was very much around don't think that all these changes are destructive at all to yourself as an investor or yourself as a business owner. It's disruption, and often and usually in my experience when there is disruption is when you see innovation, true innovation, and it's the businesses that orientate themselves around this, and that from a mindset will be those who will be the most effective in the future. And exactly the same stands by for investors. For those of you who are concerned and worried and maybe things have been thrown on its head, take a step back and look at it through a different lens and certainly orientate yourself and look for how you're going to capitalise on it. That's certainly the stance I'm taking, and it's certainly the stance that I'll be championing for the industry. So and property investors themselves. So I think I can't remember exactly the headline was, but when everyone else is losing their heads, keep yours. That's good counsel right now, and that's certainly how I'm framing and shaping things, Liam. And I think that's considered. You were with a whole bunch of property professionals yesterday. What was the word on the street? Give me a sense for the tempo. Were the conversations around, my business this and my business that, what am I going to do, and I'm not sure what's happening?
Yeah, it's a pretty fractured market. And it's as simple as that, There's what you see in the news, and there's digging into the data a little bit more. So what you're seeing in the news is, house prices are going to fall 10%, or, we've got the lowest clearance rate since 2008, blah, blah, blah. That's all true, right? Potentially, I don't know about the house price dropping by 10%, but we don't live in one unified property market. Yes, the foot is off the accelerator in Sydney and Melbourne. That is to be expected. We had about 1% price growth in Brisbane, Adelaide and Perth. Yeah. So despite everything that's gone on, so the government came out with a budget which was meant to improve housing affordability, quote unquote, and disincentivise people from investing, but prices are still going up in those 3 cities. Read into that what you will. Yeah,
I saw the Treasurer getting drilled again, and he's got very good at it. We were speaking about this last week on what's going on with property prices. A lot of journalists are putting the fact that they are falling, and they're saying, look, you said that prices, you as in the Treasurer, when he handed down his budget, was prices will continue to grow, but not at the speed at which they've been growing. And that's how he framed it. And that was the intent of the budget in relation to property price growth, whereas a lot of journalists are pointing to the fact of saying, no, mate, prices are going down. Did you expect this? And he's saying, well, there was already pressure in the market. Auction clearance rates were low before all the usual stuff were and whatnot. And property's a long-term game, so everyone just sort of relaxes too early. It's only 6 weeks since the budget got handed down. So we're going to get this discussion now ad infinitum into the future. Back to my op-ed, go and read it. What do you do about it? Well, I've certainly got some suggestions in there and some opinions around that. But our position and the framework that we will take, whether it's here on Property Buzz or any other real estate orientated work that we do, whether it's across smart property investment or REB, and it's very expansive. This connectivity is team. Let's keep it together. Property as a vehicle, as an asset class, is good. Yes, there's going to be a turbulent time ahead of it, but orientate yourself and make sure you'll be coming off the back of this in a much better position.
You sent me yesterday, I think it was. You sent me the photo of an article written in the AFR. You in print. You're
Yes.
reading the print edition of the AFR.
I read, so my habits.
Yeah.
I normally get in the office reasonably early, and I'm the first person here, and the Fin Review is always there.
Yep.
Waiting at the front desk, so I go and get myself I normally have a coffee with me, which I bring in.
A box coffee.
A box coffee. And no, I actually have normally, I normally have an espresso.
Yeah.
So I go to the coffee shop on the way to work, I get an espresso. I drink that normally at the coffee shop.
Yep.
It's very sort of
Very Italian.
very Italian, very French.
At the bar, yeah.
One of my favourite things when I am in France is to just walk up into a tabac and
The standing coffee.
Just a standing coffee, just start the day, and then get a coffee, bring that in the office, and I read the papers.
And you sent me a photo from the AFR, which was developers are sounding the alarm because off the back of the SMSF changes.
Yes.
Did I jump in this too quick?
No. So let's talk about this. But the way I want to frame this is, before we get into some of the minutiae and the detail about what I'm seeing in the market, what we're seeing in the market, and potentially what it all means, it's back to the budget. So it was debated. It's gone through the Senate. It's pretty hotly debated in the Senate. And I've been watching it I've become a bit of a political flunky, I think. And I'm getting angrier and more irritated, right? When you see, say, in the Senate, the opposition would be, trying to point out some of the second, third, fourth order factors that the government haven't really thought about in trying to push this through the Senate. And their response is always, but why are you voting against tax cuts? And they're like going, we're all for tax cuts. If you split that stuff out, we'll vote that.
Yeah.
And we'll keep that. But let's actually talk about the issues. They generally don't want to talk about the issues. Number one, because I don't know how many Labor MPs are equipped enough to actually talk about these issues with some level or degree of sophistication.
Yeah.
And number two, it's like nothing to see here because they're the big boys, right? Now, they've certainly got majority in the lower house. But this is back to my beef, and it's sort of a beef V2 of last week, which is this week. And my beef last week, if you all remember, was the beef of the week. This is something I've seen that sort of irritates me, right? And I'm easily be irritated. It was how back-channel deal-making in politics is shaping legislation. Now, a lot of people would say, well, Phil, that's how politics work, and I certainly acknowledge that. But what we saw over this week was exactly what I was talking about, where the government had an objective. They're trying to push this package of changes through the lower house up into the Senate. So in order for it to get approved by the Senate, the process of the bill, they had to do a deal with the Greens in order to do that. And that deal was that they remove borrowing from self-managed super funds, resi property.
Yep.
And they get another 8 weeks, I think it was 8 weeks, for them to debate the NDIS thing, right?
Yeah.
So the numbers for that 8 weeks around NDIS is going to cost a couple of $100 million because of delays in making changes to NDIS. Over one aspect of the property market, SMSF lending, essentially is about 1% of the total real estate sector. So this is to your point. So my beef was these deals happen behind closed doors with very little consultation. The head of the SMSF Association said, we didn't know it happened until we saw it in the news.
Yeah.
Like,
Wild.
they talk about consultative government, right? All they do, it's decisions are made, then they go to some of their mates and say, we're doing this. Okay, that's a great idea. Here's some
Isn't it like,
research report around it. This is the ongoing beef. And it's so the government has, I'm not going to use the word extortion, but in order to get what they wanted, they've been heavily compromised by another political party, which is going to have factors and issues which I don't think a lot of people have spoken about. This is around SMSF stuff. So this is my ongoing beef, the fact that these deals take place without consultation, despite the fact that the rhetoric says there's lots of consultation. Yes, it's politics, but I think a lot of Australians are getting a lot of annoyed by this, right? So here we have all these changes, right? And this is at the top end. And I want to go down on those changes to talk about it, but it's something I'm thinking about in the background. And it was sort of consistent with my op-ed, but I saw a piece, and maybe you can bring it up, on the Daily Mail, a reputable media outlet. Hang on.
Zoom out there, Arman.
Zoom out a little bit on this, right?
We won't be doing the show now.
We're not going to be able to get it up? Oh, no, it doesn't. Well,
here we go. It says, go back. Let's have a look.
Yep.
Aussie blast, Aussie as in an Australian.
Yep.
Blast Albo's tax.
Tax changes to help first home buyers after investor beats everyone at auction to snap up rundown unit for $815,000.
Okay, so no one's talking about this yet. So we've had this seismic shift in the way in which taxation is going to work around property investment, right? So there's two factors here. There's a perceived seismic shift, right? Everyone thinks that everything has changed and it's going to fundamentally change the property landscape, right? So here's a story here from the Daily Mail, and it's a young Australian, whatever that reference is, probably under 50 years old, probably these days. Yeah, buying their first home. The story goes, and I saw this and I went, this is exactly what's going to happen. This is how it's going to play out. So to summarise this story, everyone, they've found someone who went to auction on Saturday to buy their first home. And this person didn't win at auction because it was an auction environment. There was a number of different bidders. An investor, inverted commas, won at auction. So this story is about this Australian, young Australian, is saying, we've been told that you've got rid of all these evil investors because of all these evil tax loopholes that they've been using. So now is my opportunity to enter the market without all these investors there. So they've gone to auction and investors bought it, and they're going, but you told us they were all going to go away, all these evil investors. And they found someone from, I don't know, some left-wing sort of...
He's an influencer. He's an online influencer.
Influencer pretty much saying, yes, this is all wrong, and investors do this and the other. So there's this perception that's been manifested now by the government that they've made all these big, bold changes to help younger people get into the market. They've been told things are going to be more affordable, and we've now paved the way to get rid of all these rich investors so you can buy your first home. So they rock up, and there's still investors there bidding. And do you want to know why? Because smart investors, go and read my opinion piece, are saying this is the best time in years to buy investment property, irrespective of the tax setting. So Australia, younger Australians again, Australians who want to buy property, are being sold this narrative by the government that they're paving the way for them to get into the home easier, and all that's going to happen, they're going to find more and more investors buying properties at the same price point where your first home buyers are operating, because investors are probably, as a result of these changes and serviceability issues and negative gearing, are going to be buying more affordable properties, which is where most first home buyers is. So you're going to have a cluster of more intense competition at this end. So the point is, the government only has had they get one chance, right? One chance to remove all of these tax loopholes in order to create this utopic environment that's going to allow younger Australians to enter the property market. You only get to do that once. They've all now been taken away and compounded even further by the self-managed super fund changes, right? And we'll chat about that. So they've had the chance to take all that stuff away. They've taken it all away. Now they have no one else to blame. So as property prices potentially continue to rise, as more investors or as young first-time buyers find more and more investors bidding and competing for the properties that they're going to want to be buying, I don't know who else the government can blame or what else the government can change unless they completely ban investment in property. So they're in a sticky spot. And I don't know if anyone yet down there in Canberra, backroom sort of people inside of the Labor Party are actually sitting there going, what's next, guys? Like, if the script doesn't change and it's still the same environment where younger people are getting priced out of properties, you're not going to have many more levers or buttons to press. So they're very exposed at the moment, and I'm going to watch with interest how they navigate this, because the media is already onto this, saying young Australians now are feeling ripped off or let down because investors are still there. And guess what? They're going to be there, I'm afraid, in droves. Tell you what, I will be.
So
best buying condition I've seen in a long time.
Yeah, there's a lot to unpack here. And number one is...
That's just some musings.
No, and I agree. There's a lot to unpack here. You know, with that Daily Mail article, I think they bought the house for, what was it, $8.15 in the end?
Yeah, something like that. Some rundown unit in...
I mean, a two-bedroom unit. I text you, it's kind of a bargain, right? In Redfern. Like, that'd be a...
gentrifying area.
4.5% yield.
And I think the investor said, they saw value.
Yeah. Oh, 100%. Oh, 100%. And the selling agent on here said that a lot of first home buyers were actually priced out because of the needs for renovation. People don't have that cash on hand. But, there's several parts of this. To your point about smart investors, negative gearing is not a strategy in and of itself.
Yeah.
Your smart investors, and we've harped on about it, aren't in the game for negative gearing. Smart investors, if you're buying through a trust, at the end of the day, I think there's like a 6.5% difference in the tax. Realistically, the changes to negative gearing and capital gains really only do go after your entry-level investors. I think it's a fair way to put it. Your mum and dad investors, your regular Aussies that have one that they're paying off of their nest egg.
70+%. The average number of properties, 70% is one.
Is one. Yeah. A single investment property. And they're the ones that are probably going to cop the brunt of the changes. It's not your finance bros that we've spoken about that are driving around in their Ferraris. At the end of the day, it's a 6.5% difference for them if you're paying 30% tax from a trust, right? But now, there's some interesting things here. And to your point about, where do you go from here? So I noted throughout the week, I think it was Demos polling came out, and it showed since the tax changes were announced, there's actually been an increase in support amongst Australians for negative gearing. Yeah. At the time, I think it was 21% of Australians supported negative gearing, and now 26 do.
Surprise.
And the capital gains tax, this is where they've lost the capital gains tax discount. I think it's up to about 41% of people support the capital gains tax discount, because what the government did at the end of the day is they showed their hand too much. They went too far. I think that there's an argument that they could have been far more successful if they built this straw man argument and went and attacked investors, because you can kind of corral your base and you can kind of paint the picture of these evil investors, like you said. But what you also do is you go after people with small businesses and kids that are putting, $100 a month away into crypto or ETFs. So as a result, you've had a very broad backlash across all society. And to your point further, so what we're seeing is, to close that, more people support negative gearing and capital gains tax discounts now than a month ago. So we'll leave that. And to your point about what is it and how much can the government accept a responsibility for this? And we've spoken about this in the past. Property prices have increased 68% since 2022 across Australia. Yeah. So, and in markets, there'd be markets that have doubled, the smaller capitals that have doubled. CPI figures came out this week. In the simplest term, the velocity of money, the value of our money is going down. There is more money in circulation. I think it's doubled since 2022. And you can see that in the latest CPI figures. The concept that this is from the war in Iran is an absolute lie. It is an absolute lie. And I'm going to go as bold as saying it's a lie, because when you look through the CPI figures, the biggest driver of CPI was housing and housing costs. Yeah. But I thought it was meant to get more affordable. But no, housing was the biggest driver at 6.5%.
Trimmed inflation is up, right?
Trimmed inflation increased by 0.2%. Yep. Within that housing goods, that bucket, electricity prices went up 21%. 21%. 21%. I thought electricity prices were meant to go down to $170.
That's what they told us.
Wow, I didn't see that.
And mortgage rates when they first.
Of course. And looking at the things, if you're going to blame the war in Iran, you're going to blame this thing, everything else was pretty stable. Your fast-moving consumer goods, cost of food and beverage was about the 3 to 4% mark in terms of growth. When you have more liquidity in the market, there's more money going around, there's more demand, the price goes up. It's that simple. And it's very unfortunate because, yes, I want young Australians, I want all Australians to have the ability to achieve their own dream in an affordable way. But what I'm about to say kind of sounds callous, but there is a market price. And just because you don't have $2 million for a property doesn't mean that someone else doesn't have it. Yeah. There's a market price for a reason because people have the cash to go there. And in a market where wages are very, very high at the moment, especially in the public service, especially with large infrastructure projects backed by the state governments where people are making a lot of money, that's what happens. There's more money in the economy, prices go up.
Well, this is the natural inherent sort of way that things work. I'm just looking, and maybe you know the number. The New South Wales budget was handed down during.
Yeah, I think they got to trim it by $8 billion.
So what I'm asking here is so are they?
I think it's 8.
Are they pricing in
a reduction in
income?
stamp duty? Yeah, they are. It's ironic, isn't it?
Yeah, keep chatting. Let me just do a search on this.
Am I allowed to start talking about developers?
Hang on a second. I want to get into this.
No. What about the widow's tax?
Yeah.
I'll take over the widow's tax.
So it's sort of connected with it.
Yeah, I'll take over the widow's tax. So what we had this week, I'm going to call it a death tax or a widow's tax because it's what a ludicrous thing. Now, the idea was, it was only floated for about 24 to 48 hours, which is if you have a negative
8.4 billion over the 4-year estimates. Yeah,
I was right with the 8 then. Yeah.
So this is the unintended consequences of changes to capital gains tax and
negative gearing. Which is that essentially if you own a property jointly with a partner and they pass away, logically it's now in your name, different title, therefore forfeit because it's a new transfer.
Yep.
So, sorry, if your partner dies and you've been relying on that negative gearing, maybe you're down to one income. Yeah. Maybe you got kids to look after. Maybe you rely on it. Yeah. No more capital.
And it would
no
also,
more negative gearing.
So it would reset the CGT situation then as well. Yep. Seen to be a existing property and okay. And same,
I would assume so. Yeah.
And same in in divorce as well.
Yes, and they backtracked.
Yeah.
They backtracked on it because I think a lot of that. I mean that really.
But let's talk. Yeah, let's talk unintended consequences and the bombshell. And it was actually a bombshell, even though we spoke about this. And I've tried to go and find it 2 to 3 months ago. I said, I can't remember who or what or where I did a couple of things on it. And said they may remove borrowing from self-managed super funds. And I telegraphed this about 3 months ago. And that happened. So all these changes come into place. Everyone went, okay, no worries. SMSF is going to be the place to be. And whether or not they always knew they were going to do this and they had it sort of in their back pocket as a negotiating tool, but they decided not to put it in the budget because they knew that that's what the Greens would want. They could concede to it. Therefore, it's a Greens idea rather than a Labor idea because they adamantly said they wouldn't do it beforehand, but they said, well, we had to do this in order. The Greens requested it, therefore we had to curtail to the Greens, right? This is the machinations of politics. Removing borrowing from self-managed super, people go, okay. Everyone goes, yeah, it represents 1% of the market. I think it costs the budget $50 million a year, right? And again, these are numbers I read and maybe I got them wrong, but they're close enough. So sensible people like us, you would think, well, that 1% is not a lot. No. So why?
What's the point?
What's the point? Why are you doing this? Like, it's irrelevant, right? Largely, 1% of the Australian housing market is quite a lot, but still it's 1%, right? And then you see the rhetoric and from the Greens, they said what we've done essentially is stopped another wealthy investor ruining the dreams of a first home buyer because there's going to be one less person at auction inflating property prices. That's the rhetoric, right? Everyone goes, it's 1% of the market, guys. Like, really? Really? To be fair, though, where a lot of people who are investing inside for resi property inside of their self-managed super, I need to say this is for resi, not for commercials, and get remains. They're probably buying similar properties to where first-time buyers do. So, yeah, look, it's going to create a little bit of demand. So that was the top-line rhetoric was, yeah, this is another way for us to stop these evil rich investors.
They're the worst.
They're the worst. Behind the scenes, a lot of it was curtailing to their union and industry fund masters who happened to be very supportive of the Greens, who are quite frustrated with the fact that they're hemorrhaging funds under management because people are taking money out of their managed super under these super regimes into their own self-managed super, which they didn't particularly like because it was impacting funds under management, therefore reducing the fees and all this sort of stuff. So that's what the cynics would say and tell you.
I want to very quickly boil down something you said because the industry super funds, who makes up the board? A lot of union representatives.
Absolutely.
And I wanted to note that because I'm not sure all of our listeners would know that.
Yeah, and again, you sort of
super funds
said,
are inherently biased.
Industry funds, absolutely.
Industry funds,
and most industry funds, I'm being very general here, but most industry funds are typically within more unionised industries, and I would say therefore more blue collar industries or service industries. And I don't want to call like blue collar as in hardcore blue collar in the good old days, like builders and like, you know, the construction industry. But then you've got cops, nurses, ambos, teachers, you know, these are also quite unionised workforces, different sort of unions, but controlled by, you know, they're the unions connected with those particular industry sectors. And the Labor government and the Labor has always orientated themselves around the trade union movement, and you'll find that every single person that largely sits in the green room down in Canberra on the government side of the bench has probably spent some time in and around, younger in their career, the union movement of some sort. It's a rite of passage for most of them, right? I think, you know, most Labor leaders and Labor PMs have come up through the union movement, spent time there. But Bob Hawke famously with the ACTU.
I think so, yeah.
Yeah. So neither here nor there, but so that's what the cynics are saying, right? That the Greens have done this to satisfy their sort of their friends. That's all good, whatever. So if it's only 1% of markets, who really cares that much? Really, it doesn't matter that much, but it's really caused a furore. And to your point, and I was thinking about this when it happened, and I wonder how it's going to play out. Then I saw some stuff around it. So the logic is that housing becomes more affordable, allows more first-home buyers to buy their home. So the government, in theory, wants less renters and more owners. Let's call it simple. So, to my point, they've removed all of these tax loopholes to disincentivise investors, which gives a sort of greener fields for people to buy their own home. Okay, sure. So they've all now been removed. So they've now done pretty much all they possibly can to dampen demand. So the other side of the ledger is supply. Now, dampening demand also needs to be smaller. You know, you need to look at migration and stuff like this, right? That's a demand side thing. But now all the intention generally needs to be put on the supply side. So how do you build supply? Okay, people build homes. And we're already building under the rate that we need to be building in terms of satisfying the ambitious targets of the government, state and federal. So you need to incentivise, and I said the budget needed this, and it didn't say that. The budget needed some way to incentivise development because the developments at the moment don't stack up financially. Therefore, a lot of people aren't developing, right? So what the government's done unintendedly, potentially, is made that even harder for developers now. And you say, why is that, Phil? And the reason why is that new build development, units primarily, around 30% of all pre-sales. So the way a development works is that you buy a block of land and then you put some plans together and then you go to the governments and get all these certificates and everything you need in order to get permission to build. Then you go, brilliant. And then you go to a lender and you say, Mr. and Mrs. Lender, this build is going to cost me X hundreds, tens of millions of dollars. Will you lend me the money? Yes, I will lend you the money, but I'll only lend you the money if you can show me that this is feasible. And how do you show it's feasible? The fact that people actually want to buy the units inside of this development. So before I give you any money, you need to go and pre-sell all of those things. So if you can come to me and say you've already sold half of them, 3/4 of them, whatever it is, there's number of days, I'll give you the money. No worries. It's a safer bet, less risk. Because I know people actually want to buy it because you pre-sold them. Typically on these type of things, 30% of those pre-sales are people buying property inside of their super fund. So unintendedly, the government has just removed all of those people from the market, which means that developers now aren't going to have them sitting there signing contracts to support developments coming out of the ground. So you've taken a huge amount of demand out of that equation, but the consequence of that is that you're going to reduce supply because developers aren't going to be able to develop. It's madness.
Pretty simple. Like it's simple in how obvious the consequences are.
Yeah. You think some treasury boffin would
I think 50% of all new builds nationally are bought by investors as well. Now, obviously, they've allowed a lot of the tax loopholes, quote unquote, to remain for new builds. But when you rock the market like that, and now you've got a lot of people out there that are actively discouraging people from buying new builds because of the quality. Obviously, very fair questions over that. The price is going up.
But they can't build the product. So the cost to build the product is not what the product is actually worth in the eye of the investor or the buyer. So now we're just stuck in a quandary of, it's great. I'm watching Catch-22 at the moment.
What's that?
Catch-22. You haven't watched Catch-22?
I'm not watching Catch-22.
You know Catch-22?
I know the saying.
It's a famous book.
Oh, yeah, okay.
Yeah, Catch-22.
Yeah.
Have you watched?
Maybe.
Have you actually watched?
I don't know it.
You know what Catch-22 is?
I know the saying.
Yeah. So
With live, Phil, you're embarrassing me in front of my watchers.
Your homework
Yeah.
for this weekend is go and watch Catch-22. It's on SBS.
Oh, I'm not an SBS guy.
Mate, just watch it. It's free.
I'm a Channel 7 guy.
Oh, I know, but I'll go and find it. Your homework is to watch Catch-22.
I would never say no to you.
I recommend everyone read the book. It's quite a difficult book to read. It's a classic.
Yeah.
It's a classic book. Everyone knows Catch-22, I thought. But go and watch it. It's
Mate,
got George Clooney
you should
in
know
it.
I'm quite challenged by now. You should know this.
Oh, no.
Like, you're expecting a lot from me.
Anyway, so I'm calling it the property Catch-22.
Okay, yeah, okay.
It's a big Catch-22.
Yeah, it is. It is.
And the Catch-22 in Catch-22 is essentially there's this guy who's a bombardier, right, who doesn't want to fight in the war bombing because he's fatigued with it, right?
Yeah.
It's just in Italy in 1940s. So he perpetually tries to work out ways to not be able to fight.
Yeah, okay.
Running in parallel with that is that they keep increasing the mission quota. So the Catch-22 is he tries to pretend to be insane and tries to get written off as insane, but they pretty much say the fact that you don't want to fight because fighting is bad and therefore you're pretending to be insane to try and get out of fighting means that you're actually sane.
Yes,
You're sane because of this.
Yep.
The people who are insane are people who don't think that way, who
and
are just stuck in it.
Want to go.
And they actually want to go.
Yeah.
But really, they shouldn't be there because they are actually insane.
Yeah.
So the Catch-22 is because you're thinking the way you are means you are actually sane and therefore you can't get out because you're insane.
Yep.
So the Catch-22 here, it's brilliant. You go and watch it, everyone. It's really, really good. So the Catch-22 is, maybe I'm getting this wrong, but I'm just thinking on the fly.
No.
There's stuff, anyway, it's all stuff.
Yeah, I mean, and that's why, to your point, your broader point, is the sun setting on property investing? No.
Well, back to the Daily Mail story. Still going to be an investor there with a paddle.
Mate, I don't know the maths on that. I don't know the Redfern market, but I'm going to guess if you've got a 2-bedroom apartment in Redfern, like 5 minutes on the train to the CBD, you've got all the unis and stuff.
To
you
town.
can walk to town. You've got all the universities.
Brilliant.
got like the tram lines and stuff.
I'll say that's good buying, whoever bought it.
Mate, that I reckon, I don't know, I'm going to guess that'd be a 5% yield. I don't know. You'd probably tens it out like 900 a week or something.
Maybe.
If you fix it.
Maybe.
It's just in the heart. I'm plucking a figure, but
Yeah.
you know, is the sun setting on property investing for no? Like for this reason, no, because you will, and 30% of pre-sales being through SMSF, you are going to see, and I'll stake my name on it right now, a once in a generation drop in supply coming on. A once-in-a-generation drop in supply. And we already saw that housing completions are at its lowest level in like 11 years or something. Completions are down to the lowest level in 11 years.
See, unless they think, they, being the government, that you remove 30% of pre-sales through people buying inside their self-managed super fund, but on the other side of the coin, we've incentivised investors outside of their super fund to still get all of the tax benefits around negative gearing and CGT if they buy new builds. So they might be thinking, I would just shuffle the deck.
Yeah, I mean, it's not like for like though. You know, a lot of I never got the chance to buy through an SMSF. I dragged my feet. Well, actually, it was a consideration.
Snooze, you lose.
Well, that's it. It was a consideration for my wife and I, but then my wife's consideration was that we'd be too exposed to one asset class. I get it. But gosh, where was I going with that? I don't know where I was going with that. Sorry. 11-year drought or low for housing completions. Now, one thing that annoys me with the political class, where everything's on approvals. Oh, we got to get more approvals. We got to get more approvals. We got to make it easy for. Yes, that is true. Yeah. Approvals are actually quite high. Approvals are quite high. What's not happening is people building it. Yeah. And what we're seeing is a lot of approvals don't end up going anywhere because by the time you get the approval and then tax changes come through, award rates go up, the price of PVC piping going up 40%, the price of trucking going up. Oh, suddenly what stacked up a year and a half ago doesn't stack up anymore.
Yep.
And we've seen it. We had on the SPI show, we were chatting to a few BAs that are in love with the Melbourne unit market. And actually, Alex Whitlock, one of our very regular contributors and good friend, hosts a property management podcast. He's in love with Melbourne units at the moment. But the maths on that stacks up because speaking to a few BAs out there, the cost of replacement for a two-bedder apartment in St Kilda is like $900,000. Takes about, and that's how much you're going to be paying for a new two-bedroom apartment in St Kilda, be like $900K.
A new
build.
Yeah.
But you can buy established for like $550.
Yeah.
So big gap, right? Big gap. There's not many people that are going to be flooding into that market. So what you do see, and the trend, I think, amongst developers, and it's just a trend, but you, by necessity, are going to have to cater to a luxury market if you're going to make apartments stack up. And which is like over $2 million for an apartment, like very luxury markets. But that's the only way that you're going to find a market because if you're a first home buyer and you've got established for $550, why would you buy the new build for $900? Unless it's really good, maybe. But you will, as a result of this, you just won't have the buyers at the end of the day. And then people are going to be competing for established and they're going to go up.
There you go. And that's the arbitrage that smart investors are buying at the moment. You know, you want to be buying a 500 rather than 800-900 because, you know, that 800-900 two-bedroom apartment, for example.
What's the point of the negative gearing for it? Like, who cares?
It's just madness.
You're paying $3 to save one.
But that the problem is that the only way for that, if that is the price point for new build properties, properties only new once. Yeah. So you buy the arbitrage at 500. 500 should become 600, 700, 800s. The 800 you buy brand new is going to stay at 800 because there's going to be a new $800,000 property next door in the next year. Yeah. And then there'll be another one and another one and another one. So that's the ceiling. So the smart investors are buying the arbitrage.
So property prices go up?
Yep. Well, and maybe the ceiling will probably stay where it is.
Yeah.
And the rent ceilings will certainly stay where they are. But
one thing I might need to clarify, CPI figures, because I think we've been expecting, I think we were talking about it last week. Now, looking into my crystal ball, I was predicting next year a rate cut, like many of the major banks, not off the back of anything good. And we speak about it often, but it's a reminder that as investors, rate cuts good. Yeah. Nice. Good. Rate cuts macroeconomy bad, shows in a bad position, need productivity to go up, need spending to go up because we're in a bad position. Actually, sometimes higher interest rate means your economy's doing all right. Off the back of unemployment going up 18,500 in April, quite big. CPI figures going up. Wrong direction. Now they're going to.
Well, headline inflation went down.
Yeah, but who cares about headline inflation?
But it's been underpinned by
yes.
offsets.
It's all the, for example, cuts to the excise tax on petrol, right? So it's artificially lowered, trimmed, going up in the opposite direction that we want, which puts us in a bind because for the economy, in terms of people's well-being, business confidence, people having jobs, people being able to expand their businesses, at this point. Joblessness, you need interest rates to go down. Inflation ain't painting that picture. No. It ain't painting that picture.
Well, there's an argument for another rate rise potentially.
In August. And some of the major banks have said, actually, probably more likely than not.
How quickly they turn.
Oh, it's on a dime.
Yeah.
It really is on a dime. But
I typically don't get involved in speculation around interest rates. I'll tell you what, though. Here's a hot tip. 100% put my reputation behind this. Interest rates will change.
Whoa. Deep.
It's mind-blowing. They're going to go up, they're going to go down, they're going to left.
Sometimes I might even stay.
But what I would do is before we just get to our reaction videos, we haven't spoken about this, but it's important. So all this SMSF changes, right? There's a lot of lenders who have built businesses around self-managed super fund lending. The majors got out of it years and years and years ago. Macquarie there for a while, St George were there for a while, they all got out. And then essentially your mortgage managers and your non-banks really are the custodians of SMSF lending. Now, a lot of them have built big books around it, and this is for investors out there. If you have a loan connected with a property inside of your self-managed super fund, yes, you can't do anything into the future, but you can retain that. That loan can be refinanced. It's not like you can never touch the loan again. So my prediction is that depending how the lenders react and respond, some of them may lift their rates because they've got a dormant book and they're going to try and capitalise on it as much as possible. So if there is rate reductions, maybe your interest rates won't go down. Maybe they will go up out of cycle. But what I would also say is some of these lenders will look to gain market share as a result of this. So I would say there will be a flurry of refinancing activity within self-managed super fund loans. And some of those lenders may look to really grow their book through sharper pricing for a period of time. So speak to your mortgage broker. It's a very tactical thing. Go and speak to your mortgage broker and make sure that the rate you've got on your self-managed super fund is good. And as that changes, make sure you keep connected with it and ensure you've always got the right rate. A lot of them will pivot into other lending. I think there's already a lot of, and I won't share any of them now, but there's a lot of ways that you can still have exposure to residential lending inside of your super fund. There's syndicates, there's all this sort of stuff. You can set up unit trusts, all this sort of thing, right? And a lot of that will come out in the woods. So there will be certain lending, and these lenders will pivot, I'd like to think so, into other innovative areas to support property investors. So a lot to go under the bridge there for them, and we'll keep a close eye on that. But just want to pick up that point. Should we do a reaction video?
I'm going to add one thing.
Yes.
I've got it ready.
Yep,
but
good.
I think I've been whispering to some broker connections.
Oh, really? Okay.
Whispering, and I said to them, I was like, hey, just some of the deals that you see, some of the deals that come across your desk, how many BA-led deals that come across your desk are from SMSF?
Ooh.
About 20%.
Yeah, it's about right.
About 20%. Now, and I think that to our ongoing discussion about buyer's agents, there's going to be a consolidation. I see no way around it. There's going to be a consolidation. Already, connections have suggested that pipelines have dropped 20-30% from some BAs. And if you've got BAs marketing SMSF as basically free money, it's there, let's get you a property, it's free money, it's not doing anything, cutting another 20%. Another 20% from their already very constrained pipelines, I'll leave that dangling in the air.
Yes. Yeah, I would go so far as to say that some buyers agents may have seen a drop of 50+%,
I would say you're right.
and some of them even more if they were particularly hanging around the SMSF sector. So and I sort of touched on this in my op-ed piece. And I've sort of mused about what I think the construct for the buyer's agent sector in the future looks like, and I think it's probably going to revert back to what it was and should be, and that is a smaller, focused, highly professionalised industry. So it's not an industry of marketers; it's an industry of professionals, and my op-ed certainly touches to that. And I don't think this is a bad thing.
I think it's good.
By the way,
Yeah.
and I note that you the ongoing saga of that Dash Dot story. You I think there was a piece this week your team wrote. And you actually had some folk. It was an industry response. So you had all the industry heads sort of respond to it. And
Mate,
one was from someone actually called it out exactly like that, saying this is not industry of marketers. Where you go into a course with an institute. Purporting to be an institute. Like that. That was their language.
Yeah,
saying like. So I think, and I know the people I know inside of that. Most of them are saying. Well, I'm not. Yes, it's disruptive, but
not necessarily the worst thing to happen. No. Not necessarily the worst thing to happen. People took the gloves off. Other good, reputable. Because keep in mind that look, it's a good thing, but there is contagion. You don't want your industry trashed. You don't want people around the barbecue saying, "Oh, don't use a buyer's agent." I hear, these really bad stories about them, and they collapse, and you might lose your money. There is a contagion, and we do need to uplift standards, and it will take time, but it will be good in the long run. Now, Phil, this ties into our
sorry,
reaction.
just one point on that, and sort of again a bit of a beef.
You're full of them this week.
I know, but I got to call it out when I see it. just to finalise this self-managed super fund, this limited borrowing recourse LBRAs inside of it, right? Getting rid of it. It was cited again in some of the commentary I saw around it that one of the reasons why they wanted to stop this was because of spruikers. So, and this is this is important, and there's this bubble of spruiker has sort of been wrapped around a number of different professions inside of the property investment advice space, and often that's been now the wrapper put around some buyers agents, right? I don't think that's right and appropriate. However, I could see how it happens.
Yeah.
So it was again pointed to property spruikers. So this is about protecting Australians' wealth, saying there's all these evil spruikers out there and sharks who are exploiting Australians and their retirement savings through property investment schemes to invest in property via your super fund. So this was cited as a thing. So rather than ASIC jumping on this, and this is the problem, rather than ASIC jumping on this and sorting this out, it's been captured politically and then leveraged politically in order to remove this from that. So the actions and habits of a few, inverted commas, property spruikers, and they've been around for years, as long as this borrowing arrangement has been available for 2 decades, right? So why they got to throw the baby out with the bathwater is what they've done here. So yes, some people's retirement savings were at risk as a result of making ill-informed investments because of maybe the advice of unqualified people to do that. Yes, that was happening and taking place, and I do certainly acknowledge and know that. But it wasn't everyone and everywhere.
Yeah.
You know?
And your point about ASIC is so true. There will be a clampdown.
Yeah.
There will be a clampdown. But this is, this is why, as Australians, we need to have a frank and honest discussion about what property actually is and what it means to people. Because there's this notion, and I'm not saying the notion's bad, by the way, but I'm saying it's fiscally irresponsible. There's a notion that you can't treat housing like any other asset class because it's people's homes, it's their livelihoods, it's where you raise your kids, it's for safety, it's shelter. 100% true, 100% true. But it gets this special carve out. If you did in the share market, and we're going to see it in a second, what some of these buyers agents do about, like everyone flood into this market, or everyone do this, hey, let's all set up a trust, this is how you do it, and speak to your accountant, just offering financial advice, you'd be marched out in handcuffs for reasons because you are, I've got to pick my words very carefully here, you're almost playing a game with the market. and it's very dangerous. But because we've carved out property as well, you can't treat it like other equities. You can't govern it like a share. Well, it means that you do have things like, okay, people piling into a market, which we'll see in a second. We do have things like first mover advantage. Essentially, if you know, and again, we'll see in a second where a buyer's agent is looking to buy 60 to 100 houses in Alice Springs, you know, that's first move. We'll get it up. We'll just get it up. Cool. And this, for background, this is Dawn Fooey. And to everyone listening, there may be some swear words in this. So if you're in the car and you've got children around, turn it down. But Dawn was the REB Buyer's Agent of the Year for this year. She's pretty fantastic. She's pretty cool.
Buyer's agent who's looking for 60 to 100 houses in Alice Springs. Listen, this whole Ponzi scheme is about to get exposed big time. Let me explain to you how these large volume buyer's agencies work. And here we have it in real time. A nice little Canva spread from Alice Springs Realty. This is what they do. They create their own markets. They actually move markets, okay? If you have 200 clients to buy for a month or 100 clients to buy for a month, that is not investing. You are a marketing machine and you are buying en masse for people in areas. And of course, you'll get insane results. Look at this place. It has done nothing over 10 years. Like, the place has not grown. Guess why they're going there now? Because the vacancy rate is 0.5 and the rental yield is nearly 8%. They are betting on the fact that every other buyer's agency will follow suit as everybody flies to rental yield. But let me tell you something, okay? Like, this stuff pisses me off so much. That much of a rental yield is your risk fee for investing in Alice Springs. Okay, so the whole of Alice Springs has 13,000 dwellings. I don't know how many of those are actually habitable out of those 13,000. But let's say a buyer's agency buys 1,200 properties there in a year. That is enough to move the market insane. They will deplete the stock. The days on market will drop. All of a sudden, they look like some mythical, investing hero. I picked this market. You actually just created your own market because you have such a volume of clients to buy for, you can manipulate a market. But that's not the right thing for clients. It's the right thing for a business. This shit just makes me sick. You can't tell me that 100 houses a month in Alice Springs is going to be suitable for every investor. Yeah, the ones who get in there first, great, you can pull equity out. Your real risk here is liquidity. Liquidity. When you need to sell a property and you need to have a future buyer. Like, what is this? My mind is actually blown. Like, this is live that this shit is being exposed. Like, please. Like, if you're going with these large-scale agencies, like, man, Alice Springs, are we really is this is actually happening?
Good on you, Dawn.
Sean, Dawn's great. And that is, but that's, she used the M word, manipulation, which I didn't want to use before, but she said it first. So I'll reference her. But that's why almost the first mover advantage, knowing when people come in, this, that, the other, you're not allowed to do that with stocks. You'd be in a lot of trouble.
Well, this is the difference between a buyer's agent and a property marketer.
Yes.
Right? And they've always been around.
And that's exactly what you were talking about before. It's this move back to quality. And I know Dawn quite well. She's cool, works in the market she knows, down in Melbourne. And the maths checks out. Like, if you've got 13,000, good point about, I don't know how many of them habitable. You're probably right with that. But yeah, if you buy 100, that is enough to shift a market.
Yeah. Have you looked up a company who's doing it? Like, is it just
I'm not gonna get involved.
Okay.
No.
Right.
I mean, yeah. We'll maybe let that one.
But this is the point, right?
Yeah.
So, what is a property spruiker?
Yeah, and I do like, actually, she said one thing, which it's top of mind for people in commercial, but in resi we overlook it. The rental yield is the risk fee.
Yeah.
It's the risk fee, and that is a great way of putting it. And it's almost like these lessons of going back to buying in those mining towns around 2008 because your yield was so good, then the mine shuts down, you're left with this useless asset.
So here's a question for all investors: why invest in Alice Springs? Like why? Like what are the fundamental drivers of the economy in Alice Springs?
And tourism, I guess. Like it's. But, I mean, I know. I agree. It's not like you've got. I don't know if you pluck Newcastle or something. I mean, but if you pluck it, there's ports, there's bases, there's airport, this, that, the other. There's shipping, there's coal. Yeah. Like, there's a reason.
Yeah.
There's a diversified economy.
Diversified economy. Yeah. It's exactly what it is. And I don't know if you've been to Alice Springs before.
No. I wouldn't. I'd like to go.
That's, it's gateway. You think you arrive there and you're going to go and see Ayers Rock. No, you got to jump on a bus for like 3 or 4 hours.
Really? Oh, I thought it was local.
Nah, man, it's a long way from anywhere.
Yeah, right.
But look, it's cool, and it's certainly been in the news lately. Alice Springs
it has, and not necessarily for good reasons.
No,
not for good reasons.
So, the point is, there's a couple of points. Number one, to the regulators and the government, don't throw the baby out with the bathwater. Just because some people are making ill-informed investment decisions because they're being sold to doesn't mean that you've got to ruin it for everyone. Point number one. Point number two, you're the investor, you're responsible. Don't buy a property. Don't buy a property in Alice Springs.
But you know what?
Are people that stupid?
I know what you mean because, and you said it before, and you're right. Like there's an element of people being greedy, and there's an element of people you have to do your own due diligence. You can't point fingers, but I know my heart goes to people that you're smart, and that's
I wouldn't say that.
Well, you're smart, and you know
Smart
the
enough.
industry. You're smart, and you know the industry. And I think my main concern when it comes to stuff like this in particular, or those, people just pumping into like the one-horse towns is, it worries me about your regular mum and dad, your vulnerable person, someone that, maybe they're later in life, they've never had the chance to buy a house. I mean, later in life, you could be in your 50s and 60s. I need to put something together.
There's realisation, awakening, and time's ticking. And
and
so
then
they are vulnerable. And
or
exploiting
migrant communities,
it's
disabled
not cool.
people, and that upsets me because these are people that believe and trust, and they don't know. Their due diligence is they'll get the email, they'll get the CMA, and they'll get the reason why you should buy it and why it's a good deal, and they're trusting. That is their due diligence. And it breaks my heart.
Yeah. So this is the call for regulation around property investment advice, which I've been talking about for
years.
And
to what we were talking about before, with the comparison with equities, if there's 13,000 dwellings there and you're buying 100, let's say the habitable, it's a good question. So, let's say 10,000 dwellings and you're buying 100. What's that? 1%?
Yeah.
Is it? Yeah, 1%. You bought 1% in the market.
What was the name of the
Alice Springs Realty. You bought 1% in the market. I don't know. I don't know exactly if that would have to be a declaration, but I'm going to guess that is it a 5%? If you buy 5% of a company on the ASX, you have to notify the ASX.
Yeah.
Like this is the same. Like you're dwelling really close to buying what would be in a company. If it was a publicly traded company, you'd have to declare it to the ASX that you're making a major move, and they would stop share trading. There'd be all of this, and then the boards would get involved, and the ASX would get involved. But with this, because it's property, it's just fine.
So hang on, just for Alice Springs Realty just looks like a local real estate agent.
That's it.
Right?
Yeah.
So that piece of commentary there, or whatever that is, they're pretty much sending that out to people in Alice Springs that own property, saying we've got huge demand for properties in Alice Springs. Are you looking to sell? So Alice Springs Realty is just doing the role of real estate agent.
Yeah.
So you got to ask, well, who is actually going to Alice Springs Realty saying, I've got all these buyers, can you go and find a stock? So I just want to be clear on this. It sounds like Alice Springs Realty is just doing what an old-fashioned thing where they knock on a door and say, "Hey, do you want to sell your home?" It's a real estate agent.
Oh,
does.
yeah, they're
Well,
not-
they put a letterbox drop in, right? So what I want to be clear on, and I'm just speaking on the fly here, is that it's not Alice Springs Realty who's trying to sell properties to people.
No.
They're just looking to.
No, they're finding stock.
They're trying to find stock.
Yeah, they're
so
finding
Alice
stock.
Springs Realty ain't doing nothing.
No, they're fine. They're doing their job.
They're doing their job.
Yeah.
But
In fact, they're probably going to get better outcomes for their vendors.
maybe.
Like,
You know, but the point, just because they're able to find off the plan properties for investors. So, and this is the point, we spoke about this after the ARIC event, where this idea of like what is a buyer's agent, right? And they go, well, you know, and I'll speak to people and they're saying, oh, we need to standardise the briefs that buyer's agents give to real estate agents. So this idea, you think buyer's agents are out there doing deals and drinking beer with real estate agents to get the stock that no one else gets. No, they just send emails saying, we've got buyers.
I've got this off market that no one knows. Yeah.
We've got buyers. Can you find us off market properties? And they want to try and standardise that.
Yeah, I've seen some
and
of
everyone
the,
goes, we've got the great relationships with real estate agents. And then all these people are doing is reacting, going, well, these guys want buyers, so that means we can go and find sellers. That's what a real estate broker does. So I'd like to know who is behind driving the demand. So who is the buyer's agent or property company who's saying to Alice Springs Realty, we've got all these buyers who we've identified Alice Springs as the next hotspot.
60 to 100.
Yeah.
It's not going to be hard.
Yeah.
So maybe we.
I don't know.
It's buying up percent of the
So
market.
this is maybe look, you know, this is Alice Springs the hotspot that no one knows about and everyone's going to do really well? Well, history and the fundamentals.
I agree
would
with
tell
Dawn's
you.
point. There's a risk fee.
Yeah.
That's why when you buy junk bonds and they're yielding 8%, it's
yeah.
because like, oh yeah, maybe Greece is going to default.
If you can trade
You know?
if you can trade in and out quickly, that's great.
Oh yeah, for sure.
But-
Well, maybe not. Like, what's the stamp duty in the Northern Territory? I mean, how like
they don't have it in Canberra anymore.
Don't
ACT.
they? At all?
They got rid of stamp duty, didn't they?
I don't know.
Do we have another reaction video?
Yeah, I
Two.
can.
All right. Well, thanks, Dawn. Dawn, you're cool.
We got
Keep it alive. Keep going. So Dawn's point is not the process that's taking place; it's where it's happening.
Yeah, well, it's just a risk thing.
Yeah, I know she's going. Alice Springs, come on, guys.
Yeah.
really.
Yeah, well, that's literally
That's
it.
the
It's
point.
like
So the process is okay. If like if someone identifies a location and they go about the business of trying to find people, that's okay.
let me get up the
But
sale prices.
it's
Mate, look at this, $625. It's a good.
in Alice Springs.
Yeah,
Is
it's
that
a
a
good.
house?
Yeah, it's like it's a good house,
Yeah.
but $625 like $439 for
What's
a
a
two-bedroom unit.
two-bedroom unit in
Well,
Alice Springs?
that's $439. It's like a townhouse.
Yeah.
2
How many
vacant
properties
land.
how many properties for sale in Alice Springs?
899. Matt, I don't think you can even flip it. If you've got stamp on the way in and a buyer's agent fee.
Yeah, you're in for 920, 930.
Oh, this actually for buying. That's
how
those
many
aren't sold
properties
price.
for sale in total in Alice Springs?
Oh, maybe get it off.
This is what you got to look at is, you know, you get all the data. You get the data on Smart Property Investment. It's all free.
Oh,
It
no,
goes-
these aren't sold prices. These are listing prices.
Listing prices.
223.
There's 223 properties for sale
It's quite a lot.
in Alice Springs.
Yeah, it says showing one of 223. It's quite a lot. But these aren't like in 480, so they're but at that point you can just buy in Melbourne.
So this
I mean,
you got a question, right? You know, like, you know,
don't know.
why? So the point is, why Adelaide over Melbourne?
Yeah,
Oh, no.
Alice Springs.
Why Alice Springs over Melbourne?
And that's odd.
Yeah.
You know, that once you add in, let's pluck an average stamp, 30K, I don't know, 20K for the BA fee. So you got 50 and then buffers, compliance, all that crap. Let's add in another 10, 60K. You're going to have to make that back after tax.
Yeah.
You're going to have to get a capital gain of like 150 grand just to break even.
Just sell it to another investor.
Oh, yeah.
Yeah, well,
Obvious.
You're an idiot.
Look at this mug over here. Okay,
All right, let's do the
we've
other-
got
next
we've got the man of the people at the moment, Dave Hughes.
Oh, Dave Hughes. He's copping a bit of flack, old Dave.
Yeah, he's letting his opinions out. He's looking a bit rough these days. I'll give him that. Anyway,
Guys, Jim and Elbow, all about fairness. You know, what's the problem? Here's an example of they've made it fairer. Before they made these changes they didn't tell us about before the election, low-income earners paid zero tax on capital gains. Zero. And foreign nationals paid zero tax on capital gains. Now, after the changes, low-income earners pay 30% tax on capital gains. Fair. Foreign nationals pay zero tax on capital gains. Fair. So, single mum from Albury sells her $10,000 worth of Commonwealth Bank shares. They've doubled. So of her $10,000 profit, she pays $3,000 tax. That's fair, isn't it? Of her $10,000 profit, even though she has no other income. Peter Jackson, New Zealand director, lives across the ditch, worth $1 billion, $2 billion US. He's worth a lot. Maybe he buys $100 million worth of Commonwealth Bank shares. He makes $100 million profit. He pays zero tax. See, they did it for fairness. Just think, it's just so fair.
Cheesy. Man, the people between I don't know. I'm quite liking this this new Dave Hughes. I think he's really funny.
I've
always liked him.
Happened.
Yeah.
But
he's always,
I know most of these comedians. I don't know Dave. I don't think I've met
he's always
Dave.
a bit of a Melbourne lefty, I think,
Yeah.
historically. But
Certainly swung.
oh yeah, but I mean, we're in, and you and I talk about this often, off air, obviously. But you and I talk about it very often in terms of because we're flunkies, we like reading the news and debating politics with each other anyway. You know, we're in a new paradigm at the moment. To my point earlier, where support for negative gearing is higher now than it was before. Yeah. And support for the capital gains tax discount, I think it's like 15% higher than it was before. I think it's like 41% of Australians support it. What we have is it's a new zeitgeist. There's a new paradigm that we're in, which is because of the internet and that 47% owner elbow meme that was going around. There is a generation of young Australians out there that are now questioning, hey, you know, I knew all about the tax loopholes, but you've grandfathered it, so I'll never get it. Yeah. And that's the big question. You know, I saw it took all of about 12 hours after the budget before, and I'm a big doom scroller. At night, before I go to bed, I'm just on Instagram for hours. Just, I love it. My phone time is good. No, it's not, but it's just love it. Just before bed, just me time. Yeah, me time.
You read a book.
I read a lot.
Yeah.
I read a lot. You know, I read a lot. I've given you a lot of books. Never seen them back, by the way.
See, this is the problem with me and books. I always tell, because I'm a avid reader.
Yeah.
You give me one book once, and I go back to it, I spilt coffee all over it.
I thought Teddy put it in the toilet or something.
Oh, maybe.
Yeah. But anyway, what were we going with? No. So it took all about 12 hours before I saw all these Gen Z people on Instagram being like, so it's selfie. So it's grandfathered, so current investors get to keep their negative gearing, but I'll never be able to get it.
Yeah.
Reasonable argument. Reasonable. That kind of sucks for you. Like, I think it's a bad thing, right? Like it's so you're entrenching it now. Now it's generational. Now you've got people that have didn't get it done before the 12th of May, and also just the lack of comms from the government. And we talk about it very frequently, but it seems that everything's being done on the fly. Didn't really give people a chance.
Consulting groups. I'm sure if you go to the desk of most Labor MPs right now, and your senior leadership, including the Prime Minister, you'll see the great, talking about books, the great manifesto, George Orwell's Animal Farm.
I thought you were going to talk about Karl Marx.
No.
Well,
I think they've all been reading it. All animals are equal, but some animals are more equal than others. So it sounds as though the more equal animal today is the first-home buyer, and everything is being orientated around ensuring that they are the most equal, and then everyone else is less equal.
Well, I mean, I think the government thinks that they're helping them. You and I, we don't need to re-talk about the negative equity thing. I also reckon they've screwed a lot of them over.
But and this is philosophical. This is the point, right? And I don't know the answer to it. And if someone knows, I'd love them to tell me. The government, I would like to think, genuinely believes everything they are doing is for the right reason.
I think they believe that.
They would believe that, despite all of the noise and information around them, which may indicate the contrary. So irrespective, they're headstrong going down this pathway, despite everything, and they just their political response is, you don't support tax cuts. You don't support tax cuts. We're not going to talk about all this other stuff. You just don't support. It's very blunt and it's a very childish way to respond
Why
to
don't
it.
you want people to have their $250?
The chamber is supposed to be a political institution that supports sensible discussion and debate around issues about shaping Australia into the future. And I'll conclude with this remark. I've never, ever seen Australia more fractured than one of these right now. And my view of the system and the government should be, the government of the day should be binding its people together into a cohesive central force, show it leadership, and take into the future as a combined unit. Yes, you're going to have factions within it that may see things slightly different, but the role of the government is to bring people together to move forward. This government has done nothing but divide from its very first moment in government, its first choice and its first decisive action. The thing that they thought was the most important thing to do was to hold a referendum, which divided the nation. And since that point in time, subsequently, everything they've done is driven a bigger wedge into the political fabric and the social fabric of Australia. Divide, 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 divide. We've seen it with a lot of the unrest in terms of the war in Gaza, the way it's reacted and responded to the rise of anti-Semitism. Divide, 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 divide. We've seen it here within the economic construct. They've divided. They've structurally, and one of the biggest, even though a lot of Australians have an intent for greater Indigenous representation in the fabric of Australia, a lot of them chose not to vote for the referendum because it was structurally going to enshrine division inside of the Australian ecosystem and the fabric. And I'm not going to have a position on this at all. But the government has constantly sought to divide the nation, and now they're dividing it on property taxes, to your point. They've divided it. Those people who were before have enshrined advantages that people that come after them won't be able to have. That division's been put in place. So again, they've divided the nation. You know, you certainly have haves and have-nots. There's certainly certain Australians. Have-nots. There's certain Australians now are more equal than others.
Yeah, I couldn't agree more.
They're creating a new class.
For all of those reasons, I mean, the generational war that you've created, by having an SMSF have and have not, the negative gearing have and have nots, the way that they bottled to your point before, the anti-Semitism, the Royal Commission kicking and screaming, like this is a community that was under attack, and you couldn't even have an inquiry into it. It's appalling.
But they're also, well, if you go and look at the argument of this last week has been Pauline Hanson's address at the press club, where she started talking about monoculture, right? Yeah, which is quite divisive. But it's brought to the fore again this whole discussion around immigration setting of Australia, and you know there is supporters all over the place that have different views of what multiculturalism looks like, and whether that is, you know, post-war, it was all about assimilation, and we welcomed people into Australia whose role was to assimilate, and they wanted to assimilate. Now we support, and the government supports, you know, ensuring the unique identity of these different migrant communities and allowing to thrive and flourish under that regime. Like, you know, I'm not going to have a position on this whatsoever, but again, everything is divisive. It's not about cohesiveness. And, and I'd like to see more from the government of the day around that, and we're losing our way a little bit, personally, in that, you know, you want to feel part of something which not got a wedge through it. And everywhere I go right now, every conversation I have is divisive. Everyone is divisive, you know. Tax planning is now the dinner party conversation.
It is.
Rather than what are the kids doing at school or tell me about the property market. You know, everyone now is scrambling and trying to maneuver to orientate themselves effectively around all these changes that the government's been putting in place. So I'd like to see a little bit more. Bring the country together. Stop fighting against it. But anyway, that's not my job. That's the job of the Prime Minister and his people.
Yeah, well, I don't have much faith. I don't know how much hope. I mean, we don't need to relive it. I think most of our listeners will probably agree.
Yeah. Anyway, all right. Well, thanks, Liam.
Thanks, Phil.
What's on for the rest of the day?
I'm back in for a smart property investment podcast after this.
It's 11:45. We've gone for a bit long.
We've gone for a long time.
When's the Australian game start?
15 minutes.
Really?
Yeah.
You guys go to the pub to watch it?
I wish I could. I've got a podcast at midday.
Oh,
with winner of Buyers Agent of the Year at the Buyers Agent Awards, Simon Liu.
Simon Liu coming in, is he?
He's probably waiting outside the studio.
I'll make sure I say hello to him. But well, thanks for your time and thanks,
Phil.
gang. This is Property Buzz, a little bit long, but as you can see, it's pretty organic. We chat about the things that we're seeing as a debrief at the end of the day, end of the week. And it's nice just to try and capture it all and give some sense to it all. And I encourage you all to go and read that op-ed that I wrote. You'll be able to go and find it. Just search my name and track it down and just give us a sense for maybe how you should be framing the moment in time.
And actually, I'll do a bit of a call out as well. We've had a lot of people that have gotten in touch. Just yesterday, we had a Dash Tot accredited client that's got in touch. We've had agents that have been adjacent to everything going on as well that have gotten in touch. They're always here. And his
How do people
scoops,
find you?
Liam.Garman, Garman, man, not min, at momentummedia.com.au, or hit me up on Instagram, everyone else does. And I'd love to have a chat.
Maybe we need to get an easier email address for people, like hi at something.
Yeah.
We'll work it out. Your homework, Catch-22.
He's Catch-22.
Catch-22. You'll enjoy it.
I will.
You'll
It
get
sounds
it.
pretty funny.
You'll get
Sounds
it.
pretty
You'll
funny,
get it.
yeah.
Remember to go and check out propertybuzz.com.au. We'll see you back next Friday for Property Buzz and more chit-chat about what's going on. Until then, bye-bye.